Welcome to the Work Your Money podcast. I'm your host, Michelle Wong.
I'm your co-host, Willie Morales.
Each week, we talk to people, either on the internet, through the phone, or in person.
We try to get the best business minds on this podcast.
Thanks for joining us. Subscribe on iTunes, and please enjoy the show. Today, we're recording on Google Hangouts. We have a great guest. It's Sonya Rocvil. She's a real estate investor. Welcome, Sonya, to our show.
Hi, Michelle and Willie. Thank you so much for having me.
Hi, Sonya.
So, Sonya, tell us a little bit about yourself.
I am the principal and founder of my company, Rocvil Enterprises. My company focuses on investing in multifamily apartment buildings, primarily in the southeast region of our country, so more in like the Georgia, Florida, those areas in the southeast, North and South Carolina, for example, and really not in New York. It's been a really incredible journey and actually an honor to be on this call and to be interviewed as an entrepreneur. I never thought I would be an entrepreneur. Actually, I started out my career in public accounting, and I spent most of my career in finance and corporate finance. And the opportunity presented itself when there were changes in the company I was working for, and my job was being eliminated. And it gave me some pause to take a step back and to think about what it is that I really wanted to do. And I've already had a passion for real estate. So I decided to pursue that, and I'm really happy that I did.
There's more women now coming into the industry, and I really do feel proud when I see more women being in this type of industry and in business in general. So it's and the other thing too is that listening to how you got started, from going in from finance to transitioning out and going into real estate and having a passion for real estate, I can, relate to that.
You don't realize how being in a 9-to-5 or any job that you have, if you really do you learn a tremendous amount, and you're building your own brand, even though you're working for someone else. You're attaining skills that you can somehow redeploy and use for something else, and that's what was a really big aha for me, moving from finance, as you will, into real estate investing, because a lot of what I learned in terms of business analysis and investment optimization and internal controls and the work I would do for due diligence, a lot of it was very similar. But the thing is, when you're working, you have your employer, you're not really thinking about how to use it necessarily for yourself. You're thinking about, how can I do the best for the company that I work for? And a wise person who's my husband actually always says, it's always you Inc. The company you work for should always be Sonya Inc. or Michelle Inc. or Willie Inc. And the skill sets and the work and everything that you're doing is to help your own and brand, so you can take that out and juxtapose it anywhere you go. So that was a really great motivational piece. He tends to give a lot of keynotes of wisdom there, and just something that I think everybody should always think of. You don't have to, no matter where you are and what you're doing in your life, you don't have to think of it like you're doing it for somebody else. Ultimately, you are doing it for yourself.
what made you get into multifamily? Why not start
Yeah.
small with single or maybe even a duplex? Why jump into such a big investment? What made
Yeah,
you do that?
so one of the things I definitely give a lot of credit to one of my mentors, who is the leader of the Real Estate Investor Association at of New York, Dr. Teresa Martin Esquire. She always emphasizes education and learning, and she always said, when I first joined the RIA, because that's how I first got started in investing. I did a lot of research. I found this organization, and I found her, and she said, you have to have a strategy. So I did think at first, okay, maybe I'll do single family houses. Maybe I'll just buy a single family house. And at the time, because I was still learning, I was very focused, and maybe I could find something in the outer boroughs in New York or in Queens or something like that, because that's what I was familiar with. But then the prices are so high here in New York that it just seemed like, this I don't see how I'm really going to make any cash flow from this. This is going to be really tough. So then, I looked at, continued to explore different strategies, and then I came upon one of the vendors that she had, Chris Urso, talking about multifamily investing, and I explored that more. I went to one of the events that they had where they talked about what they did, and to me it just really resonated with me, because it was large, because it was economies of scales. I was thinking about, wow, it may be easier to have, a 20 unit building than 20 different houses in different places, or just having one property manager to manage a larger place. The economies of scale was the piece that really just resonated with me a lot. So, um, but the thing that really, helped me even further was realizing that I could connect with people and just have partnerships with people to do things even bigger than I initially thought. That was a big learning for me, just being able to realize how important it is to have partnerships, because you can leverage each other to really do more than what you thought you could do on your own.
Was that your first investment then into the multifamily business then? That was your first official investment?
Yes, it was. It was. What
Wow.
I was able to use some IRA monies, using a self-directed IRA. I made some passive investments, in when I first started out, in a 108 unit property in Florida, and it was like a 30 unit uh, in in Cincinnati, Ohio, and that was my first investment in real estate.
What's a self-directed IRA? Can you explain that a little bit to our audience?
Sure, absolutely. So a self-directed IRA is a type of a platform. It's not like, most people can have IRAs that allow them to invest in stocks and bonds. A self-directed IRA is a platform really held with a custodian, and you direct them to how you want your money to be invested. So it could be stocks and bonds, but you can also have the money invested or directed to invest in real estate. Um, you could have it invested in another business. Let's say you know somebody who is starting a business, and you want to loan them money so they can start their business, and then you're going to get, a debt or equity position in that business. You can do that through the self-directed IRA. So it really opens you up in terms of true diversification of your assets. A lot of times people talk about diversity, but they're saying, but a mix of stocks and bonds. This could be stocks, bonds, real estate, a loan. You could purchase real estate directly in it. It just provides a lot more flexibility and allows for real diversification for your retirement portfolio.
When you went to Atlanta, how was that? How did you find that market?
Right. So, it's a great point, because it did take me a while, even though I had said in the beginning that when I was looking at the prices of New York, I thought, wow, it's really high, and that led me to look at other markets. It was really through doing a lot of market research that really helped me get comfortable with why I would choose another market that I can't just like run across the street to or take a cab to look at the property. So one of the things that really was appealing to me, and still is, about the Atlanta market is just the population growth there, the trend of the unemployment rates, the fact that new jobs are continuing to take place, and companies are going down, particularly in the South, to expand their businesses. Land there is cheaper, so it's less expensive to have larger facilities there. You have a very high concentration of Fortune 500 companies in that region. And also, it's a very business friendly environment, and also a very landlord friendly environment. So those were all factors that kind of helped me do that. When I put in an offer for another property, but still in Atlanta, and I went down and had a chance to drive around the market and look at different places. So that got me a little bit more comfortable by the time, I did finally, we found this deal that we actually ended up moving forward with. But another key thing is making sure you have very good property management in the area, because that is the key. You're not going to be there day to day, so you need to have confidence that the property management group that you're using is excellent, and they're aligned with your goals, and they're going to help you succeed.
Where did you go, or where would someone go to get that type of information on a market? Is there a site that you went to, or was it you just talked to people in the industry and they led you to Atlanta? How did you gather that information?
Oh, about Atlanta, the market, or the
Yes.
Yeah. So, well, I knew that I was looking for markets that did have that high growth rate, declining unemployment rate. So, there are, you can go to the various websites, like the census, for example, because that has like population information in there. Um, for the employment rate, you can go to the Bureau of and the Bureau of Labor Statistics has that information on there too, so you can see what the average unemployment rate is for the nation, and then just how cities rank in terms of their unemployment rate, and looking at the trends as well, because it could be a little bit higher than the national average, but if it's going down, that's a good trend. And then once you find those, trying to do a little bit of research, more like Googling the city and looking and just finding out more about it. So you can go to, a lot of cities have an economic development organization as part of their like city website, so you can see what types of things are happening there. It's their opportunity to sort of boast about their city, and so you can read about that, out what's happening, what new jobs are coming.
I think that one of the essential things that is important in this type of industry is, especially when you're not in the same state as your investment, is to have a team. Willie
Mhm.
and I are always talking about that it's essential and it's a crucial point to have a team of people. If it's not a realtor that is there that knows the area, or someone that would be able to take a look at the properties for you,
Right.
property management, having an attorney, a title
Mhm.
person. These are all essential, because when you can't physically be at that place, they're your eyes and ears, and those are the people that you have to have that trust with,
Right.
and be able to provide you the information that you need, so that you can decipher if you want to, invest in that particular property or not,
Right.
and
Right.
and especially the other factor too is that if you're also with a group of other people and they're looking to you as, being like the leader of the group to, execute it, that's an important factor, is just to be able to have um, that team there for you to be able to run everything while, you're doing other things.
Right. Absolutely. You absolutely, because the thing is, while you have an expertise in either finding out information about the market or doing the analytics specific to your deal, you're absolutely right. You are not the legal expert on how to create the operating agreement that you're going to need. You are not the tax accountant who has like the background. So you do need these people on your team, and it is a really great point, and that is key for us too. In addition to the property management on the ground, having the other folks, your legal team, the accounting team, and also having a good relationship with your brokers as well, because they can also give you insight into the different areas, things that are happening local in the market.
Yeah, that's like the conversation that Willie and I have all the time. We're working on a few things in the Philadelphia market, so we
Mm-hmm.
do have a few people there that are looking out for some of the properties, and letting us know what is going on, um, and things like that, and he says it. He's like, I don't want to be a landlord. I really
Right.
don't want to deal with the headache. I'd
Right.
rather be the person just making being able to speak with the seller, make the deals, and, have a property management company to be able to handle those type of headaches, because I don't know anything about repairs. I don't know about
Right.
any of that. And he's
Even
absolutely
if I
right.
did, I still wouldn't do it.
Yeah.
It could be the property could be right across the street from me, Sonya, and I'm still gonna have someone managing it. So
I agree
I
with
have
you.
I
I
have
agree with you.
no desire to be a property manager at all.
Yeah. Yeah.
So
Yeah.
so yeah, I'm 100% with you guys about getting a professional to do it.
Yeah, yeah, and we rely on them heavily, and they have a very important job, and I really respect what they do. But yeah, it's a tough job, and I don't want to do that
No.
one either.
So Sonia, once you made your track to Atlanta and you knew that's where you wanted to go,
Mhm,
and then you found the property,
mhm.
um, was it tough to get partnerships to invest in that type of deal?
Yeah, starting out, so I had my business partner already, and she and I were working on getting investors for the deal, because we were syndicating the deal. So it's really, our family and friends, people that are in our close circle that were there. It was definitely really tough, because at first it feels like, okay, I'm asking people for money to do something, but then it was sort of having to rethink that thought process, and realizing that this is a good opportunity, and that's what I'm trying to offer to people an opportunity for them to build wealth, an opportunity for them to have an asset in their portfolio that I really believe is strong performing and will be strong performing as we're running it. So, you know, that's really what we're giving people. And, you know, it's interesting. It was almost sometimes, you know, like people who seemed like they were going to be part of the deal ended up not being part of the deal, and people who I wasn't sure if they were going to be part of the deal, they were. So you never really know what's going to happen at the end. And for me, it was definitely challenging because I was sort of shifting my career, if you will. Like, people always knew me as, you know, either, you know, an accountant or, you know, finance person. But now I was the real estate investor. And so, you know, for some people it was a harder shift. For some people it wasn't. So, you know, but in the end, I'm just really proud of the work that we did with that property, and all the people who entrusted us with their money. We were able to do very well for them. So that's the thing that makes me feel really good about this.
But for a newbie investor,
Mm-hmm.
on a deal like that,
Mm-hmm.
not yours in particular, but in any other
Right.
field, any
Sure.
other property, I should say, what would be the minimum that someone could get in on something like that?
Well,
That you heard of?
yeah, it definitely depends on the deal. Like, you know, I've heard of various ranges, but I think, you know, sometimes it could be, you know, like 20,000, or, you know, sometimes it's even $10,000, depending on if you know your connection to the person, and being able to talk to them about it, and your interest level. You know, some of that is also, you know, there are different regulations, you know, so that's in terms of the number of people. Sometimes, you know, you have to, as your lawyers will advise you to just make sure that you adhere to all of those things. But yeah, it could be as low as that. And I've heard of people give, you know, 10 times.
During your 3 years of having this real estate investment business,
Mm-hmm.
what do you recall is one of your pitfalls, and
Mm-hmm.
what do you recall has been one of your highlights so
Yeah.
far?
Yeah. So, I mean, one of the things I'd say that's definitely challenging when you're taking on a new business, um, you know, especially when you're coming from, um, you know, like a corporate environment or 9 to 5 environment or whatever work environment you are. Usually, when you're coming from those environments, you're a specific role. You're the marketing person, or you're the finance person, or, you know, you're the salesperson. When you're moving and shifting into being an entrepreneur, you really wear all of the hats. You are the IT person, your communications, your sales, your finance, your everything in one, and that can be overwhelming. And I think, you know, recognizing that a bit sooner kind of helps you realize that, okay, I can't do everything. I just have to know enough to know that I need, what we were talking about before, the right people on my team to help.
Mm-hmm.
And where do I really need to spend my time? So,
Mm-hmm.
you know, maybe all of your time shouldn't be spent. And it's tough in the beginning because, you know, you're lower on funds, you're just starting out. So, you know, paying people to do all the different pieces is a little bit harder to do. So that's
Mm-hmm.
why a lot of times entrepreneurs end up doing everything, and they're stretched in the beginning, especially. But, you know, maybe you don't need to be the person that's working on all the aspects of the website, you know, or maybe you should just be focusing on putting together some content and like help, and, you know, trying to figure out how you can work with somebody to help you like get it up on there or something like that, you know. Or for me, just having the trademark for the trademark for my company, just recognizing that I'm not going to spend all this time trying to understand trademark law and trying to figure it all out. Getting somebody who knows how to do that is probably a better use of my time than than uh, than me trying to do that, because I'm not spending the time finding the deals, building relationships, and doing the things that I need to do to get another deal. I guess sometimes you just have to think, like, if if I'm not doing X, Y, or Z, then how is that going to move my business forward? And if it kind of falls outside of those things, and you're just kind of like doing busy work, and you're not really growing your business. So that's something I would say is a watch out for entrepreneurs in general. But definitely some of the the upsides is having that flexibility in my schedule. I really enjoy that. But sometimes that means flexible means working at midnight. um, um, and then but the highlight for me is really just the returns that we're able to provide our investors. That is always the highlight for me, for my business, because we're helping people grow their wealth and build wealth, and that's the most important thing at the end of the day, that we're succeeding in doing that. So that's what I'd say the highlight is. That's one of the big ups.
That is a big one.
Yeah. Well, for the pitfall part, I guess, you're absolutely 100% right. For us, when we started out, it was the same, we had the same struggle. It's basically trying to see how we can, market things, how to get leads, how to get clients, how to become visible to the public. And one of the things is that because of the fact that we have a partnership between three people, each one of us can concentrate on some angle of the business.
That's something that I find to be very beneficial with my partner for our lands and property. She and I work very closely together. I think it's important that you have the same values as that person and the same work ethic. I think those are things that are very important. And then just having that open communication, and also just not being afraid to say that you don't know something or you don't understand something. Sometimes when egos get in the way, you don't get things done efficiently. So having that openness and open communication is also extremely important. Yeah, absolutely.
So, Willie, we're getting to our favorite part of the segment.
So, Sonya, I mean, you gave us a lot of great info, especially about, where to search online, census.gov, the Bureau of Labor Statistics. On another note, like, what are what are you reading right now, and what books you recommend the audience that they can look at and read?
Right. Well, for me, just in terms of books that I recommend, I would just recommend whatever you're interested in. You should read about that industry, whatever you're interested in. Like for me personally, because I always had that interest in real estate, I think probably most people have read the Robert Kiyosaki books, but those books on cash flow project, those really awakened something in me that I didn't realize was there. And that's kind of like a big spark. It was years ago, and I don't even know what led me to read those books. But sometimes I feel the things that you're interested in, you kind of get pulled towards them. And somehow I found those books, and it just made so much sense to me in being a business owner, being an investor, and particularly investing in real estate. That was an initial thing for me. I also really And with that, when I became active with the real estate investment organization, playing the cash flow game, also based on those books, was also fantastic, because the more you do it, you realize that that's how you're going through life. The object of the game is to get out of the rat race, and so you're literally you have a job, you have expenses, and you're trying to figure out how to get out of that. And it's really a great game, because it kind of shifts your mindset and helps you think about in parallel what you're really doing in your real life, and like how can you shift what you're doing in your real life to maybe mirror this more, because we're always playing cash flow.
Yeah, well, I think it's such a great game. We got to get that game out there so people to understand finances.
Yeah, no, it's really good. The other book that I would definitely recommend is The Go Giver.
Yes, I read that. Great book.
Yeah, that's a great book, and it's not a long book. It's a very fast book, but another one that a mentor had given me, and it's really about, in summary, just saying that your value is really what you give to others, not what you take.
Right.
So it's really about being a giver, and that is what really creates your value to other people. That's how you add value, being someone that adds value to others. So that's a phenomenal book.
So Sonya, for our listeners out there, where can they find you?
My email address is info@Berry Rocvil. That's BERRYROCVIL .com. That is the best way to contact me. You can also go to my website, berryrockville.com as well. And there's a page in there to contact us. You can sign up for a newsletter, or just reach out to me.
Okay. And Willie, where can our listeners reach us?
Well, besides reaching Sonya for mentorship, which everybody should do from now on, send her like 190,000 emails and she'll respond daily. Well, you can find us on iTunes and just type in Work Your Money and give us a great review, especially after this show. Also, you can find us on Facebook, which is facebook.com/Work Your Money. And you can also find us on Patreon, Patreon.com. Just type in Work Your Money. That's a platform for small donations to keep our show going, to get a better equipment. We'll give you guys something in return, obviously. But those are the three places that you guys can find us.
So there you have it, guys. Sonya Rocvil, real estate investor and a mom and wife. And until the next time, everyone, this is the Work Your Money podcast. I bid everyone a good evening. Bye.
Bye.
Bye.